Thinking about selling your home but still have a mortgage? Don't stress, you're not stuck. You can absolutely sell, and I'll show you how even if you owe more than the house is worth. But here's the catch. If you don't handle it right away, you can end up with unexpected costs or even walk away with nothing. Today I'll break it all down: how to sell with a mortgage, what happens to your loan, and how to make sure you actually walk away with money in your pocket. We'll cover things like getting your mortgage payoff and determining your equity. We'll discuss what type of mortgage you have, checking the local market, navigating the sales process. Stick around because this guide will save you some big financial headaches. Before we dive in, don't forget to hit the subscribe button and smash the bell for more valuable real estate tips and advice. Now let's get into it. So how does selling a house with a mortgage work? First things first, can you sell a house if you still owe money on it? Absolutely. Here's how it works. First, the mortgage payoff. When you sell your home, the proceeds go toward paying off your remaining mortgage balance. Whatever is left over after covering the loan and the fees is your profit. Here's a fun fact. According to the U.S. Census Bureau, approximately 61.5% of homeowners had a mortgage on their home that they still owed. And about 38.5% of homeowners had fully paid off their mortgage and are now living debt-free during the 5-year span covered by the data. Okay, number 2, getting your payoff amount. Your lender can give you a payoff statement which shows the exact amount you owe, including interest and fees. This number is crucial for pricing your home correctly. Number 3, determining the remaining equity. The equity in your home is the difference between what your home is worth and what you still owe on the mortgage. For example, if your home is worth $400,000 and your mortgage balance is $250,000, your equity is $150,000. So step 1 to selling your house that still has a mortgage on it is understanding your current mortgage. Before putting your house on the market, it's important to know where you stand with your mortgage. Let's break it down. Check for prepayment penalties. Some loans have prepayment penalties for paying your mortgage early. So check your loan agreement and see if this applies to you. Know your loan type. If you have an adjustable rate mortgage or an ARM, selling before the rate changes could save you money. On the other hand, a fixed rate mortgage makes your monthly payments predictable, which buyers love to hear about. Step 2, pricing your home with a mortgage. Now that you know the payoff amount and equity, let's talk about setting the right price. First, factor in your payoff. The sales price should at least cover your mortgage balance, plus additional costs like agent commissions and closing fees. 2, check the market. A comparable market analysis, or a CMA, will help you determine what similar homes in your market are selling for. Pricing competitively is key to a quick sale. Number 3, avoid overpricing. If your price is too high, your home could sit on the market, costing you more mortgage payments while your house sits on the market for months. Step 3, navigating the sales process. Once your home is on the market, here's what happens next. First, accepting an offer. When you accept an offer, the buyer's funds go directly to paying off your mortgage. Any remaining balance is yours to keep. Number 2, closing costs. Be prepared for additional fees, including real estate agent commissions, which is typically 5 to 6% of the sales price, title transfer fees and property taxes, potential repairs and concessions requested by the buyer. Here's a fun fact. Seller closing costs can vary significantly, but according to CoreLogic's Closing Corp, the national average for seller closing costs, excluding real estate commissions, is about 1.81% of the home sales price as of 2021. Number 3, title transfer and mortgage release. Once the sale is finalized, the title company ensures your mortgage is paid off and the title is transferred to the new owner. So here's a common question. What if your home's value doesn't cover the mortgage? This is called being underwater. Don't worry, there are options. First option, a short sale. A short sale is when your lender allows you to sell your house for an amount that's less than what you owe on the mortgage. Keep in mind though, you'll need to get your lender's approval to move forward, and it could affect your credit score. Usually lender will not approve a short sale unless you're behind several months on your mortgage payment, which will negatively impact your credit. Number 2, cover the difference. If possible, you can use savings and other funds to cover the gap between the sales price and the mortgage balance. Number 3, talk to a cash buyer. Companies like House Buyers of America may still buy your home even if it's underwater. Now let's talk about some pitfalls to watch out for when selling a house with a mortgage. First, not getting a payoff statement. Failing to get an accurate payoff amount can lead to pricing errors and delays in closings. Number 2, ignoring repairs. Even with a mortgage, neglecting repairs can lower your home's value and hurt your chances of selling. Number 3, overestimating your equity. Don't assume you'll pocket the full difference between your home's value and the loan balance. Factor in closing costs and agent fees. If all this sounds overwhelming, there's a simpler way to sell your home if you work with a cash buyer like House Buyers of America. Here are some key benefits when selling to cash buyer. 1, no repairs needed. 2, fast closing. 3, no hidden fees. Here's a real life example. Lin Tu experienced the benefits of fast closing firsthand. After inheriting a property with a mortgage balance that was becoming a burden, he sold to us without needing to handle repairs or pay ongoing costs like property taxes. We made the process seamless, and he was able to focus on his future plans. Best of all, he closed in days, not months. After we closed, we did all the heavy lifting and renovated his house. Unlike the traditional way of selling, you won't have to deal with agent commissions or any extra fees. It's all straightforward and transparent. And there you have it. Selling a house with a mortgage made simple. Whether you're looking for a quick sale or trying to maximize your equity, understanding the process can save you stress and help you make smart decisions. If you found this video helpful, give us a thumbs up and hit the subscribe button for more real estate tips. And don't forget to check the description for links to our blog post on this topic. Thanks for watching. See you next time.